The vote to leave the EU is a huge change in the economic weather, and it's the Bank of England's job to react. So today, it's cut the bank base rate to 0.25%, the first change to interest rates in 7 years. The shock of Brexit also meant the governor and his team chalked up their biggest ever downgrade for the forecast for economic growth. So time for action.
There is a clear case for stimulus, and stimulus now, in order to be there when the economy really needs it, to have an effect when the economy really needs it. So this is about cushioning the shock.
In this South London restaurant, they were digesting the news. Would the rate cut make any difference to the owner, for instance, who's just set up here?
It will, because we financed our business through the traditional route of a bank loan, and it happens to be a tracker loan. So cutting the interest rate does mean that I have a little bit less to pay back.
Julia was exchanging on a flat today. There was just one snag with the mortgage.
There's been so much uncertainty that every day has sort of brought something different, and thought, should I, shouldn't I? And in the end, I've decided to go with it. But
With a fixed rate?
With a fixed rate, but hearing this doesn't fill me with great joy.
First-time buyer Liliana, though, is very happy.
I feel excited, and I'm happy that this happened because I really want to buy a house, and I want to get... I don't want to pay too much.
So good news for borrowers, bad news for savers, but the government is still welcoming it.
And the measures that have been taken today are designed to ensure that any increase in unemployment as a result of the economic slowdown is kept to the absolute minimum possible, and to support economic growth through the next 18 months, 2 years, as we face this period of uncertainty as we negotiate our exit from the European Union.
Right now, the priority is to keep the UK economy moving. The Bank of England believes it's made a start on that today. Andy Bell, 5 News.